Good day, AVZ traders. I trust you are well. Now, this video is going to be short. We are going into the last quarter of the year. So there are levels that you all need to have on your charts. You need to put them in and keep them in until we crack through to the beginning of the next year, 2026. The reason, of course, is that the last quarter of the year is absolutely significant for all traders, especially the big traders trading off the monthly, daily, even weekly charts, the big influencers, because they want the market to end and close at certain levels, and the fight is on. So very simple, very easy for us to plot in. You need to have the low of the year on any and every one of the markets that you're trading. So I'm only going to work through one, then you can go and do the rest for yourself, but you need to keep this on. So I like to use red, and that I can just simply write in the name here. This is the law of 2025, law of the year, law of 2025. Bang, that's all I need to do. And when the market starts to get to that, and I can see, oh, there's a level there, low of 2025, it's at 1.20966. That's all I need to do. And then I got to find the highest level. And I use green, light green for that. And of course, I just write here high of 2025. That's all I got to do. And what have we defined for ourselves, guys? You've got to just instantly say, now that it makes sense. We have right up here the upper valuation zone for the year, the most significant zone for the year, the lower valuation zone for the year. And of course, everything that we have remains extremely valid. Sell zone, buy zone. And what else do we need to keep track of? The midpoint, middle of the year. And that is exceedingly important as you go into the last quarter. You recall I never mentioned any of this as we went through our different stages in the course. They're pretty irrelevant until we get to the end of the year. Okay. Reason I say that is as you go through the year, there will be other things that will help you to identify these levels. And I'll give you an example just now. But the middle of the year, absolutely important. Why is it important? So this is the midpoint of 2025 current range. Let's just do that range of this year. Well, it's important because, as you know, if the bears break out beneath this level, they are demonstrating, signifying to the whole market that the bears have taken control of the market. If you were to look at a yearly chart, market went up, came down, you have a tail, at the top, and of course they wanting to keep selling until they get, this is the beginning of the year to the opening of the year, and to create a bear candle. But first, of course, they've got the tail forming on top, and if they get beneath the open and beneath here, then we have a bearish year. That's all they want. Bulls, of course, want to stay above here so that if the year ends and everyone looks back at last year, this year now, when it becomes last year in 2026, they'll say, okay, that was the high of the year, low of the year, middle, so bulls controlled it, so we're expecting the market to be bullish as we start off the year. So the fight is going to be on towards into the last quarter of the year. You have to have those levels clearly marked. Now, again, when you look to your left, what else is significant that you think you need to mark? Well, you can have a look here, right from the low that we had. We got to what became the midpoint by the time we got there. Big fight at that point. There's a big fight that was a high. And bears tried to sell off and failed, and the bulls came back with such dramatic force that they put in 2, 4, 6, 8, 9, 10 consecutive bull breakout trend candles. The first time we've had that in this whole market for a while. So the bulls were very strong. So that level, which happened to be the low of August, is key. Now, if we get to that, September, October, November, wherever we go, that was a key level that led to a new high. That's what makes it key. low of August 2025. That's very distinct. And, as month unfold, we just keep, when you get to the new year, we stop worrying about. Because if the bears get out beneath here, they have to take that out. So first, of course, if they break beneath the low of, the midpoint of the year, fantastic, market is bearish. But if they take out this low, then they've told the whole market that whatever bears created this, they're gone. We, the bears, have taken over. I wouldn't worry about this. Why wouldn't I worry about that? Because when I'm trading the day, when you put a high of yesterday, low of yesterday, or measured move takes us to that level. So don't have too many lines on your chart. But you also see at this level here, that is the low of July. You can mark that level there. But this is very important. The reason I'm saying you don't have to. I need you guys to start to differentiate key levels, key higher levels and key lower levels. When you have a low from which the bulls accelerated and created a new high, that is a key level that the market is going to watch. So up here, already the high of yesterday, the bulls accelerated up, but they could not even get above this lower high. They tried yet, they could not get above this high. So these lows, although they're there on the charts, they did not lead to a new high of the year. So why bother about it? This one did, and it has not been taken out. So that is a key level. All the other levels will pick as we go through, with our measure move for the range, for the day, etc. So that is absolutely key and absolutely important. You need to have that. Then, of course, guys, you know the story. When you go into the day, just show you quickly. We do this all the time. This is our bread and butter, right? When you go into the day, okay, the market is going to open in a few hours' time. So this was Friday. So, of course, you'll have your high off. Yesterday, this is when you open up on Monday, and you'll have a low. Because now we will be going in to trade this particular day, and you'll have your midpoint. Market is bearish, going down, there's a midpoint. And our asset valuation zones are set up for us. And we'll make our decisions as we go along. Down here, low of yesterday, high of yesterday. If the bears are strong enough to break out beneath here, they want to get to a measured move. There is the measured move as a target. That's all you got to do. Then you start to work, right? If you go back to the daily, remember what we had before with the high of the year, with the midpoint. So I've just put in high of Friday, low of Friday, and there's a measured move. So I'm not going to worry about that at all, right? Because when I'm in that vicinity, the market will be doing whatever the market does. So that's what you're going to do. But I am going to delete the stuff that you're going to put in the morning when you trade in Monday. Just to close off very quickly by saying, guys, with every single chart that you trade, you need to have the high of the year, the low of the year, the midpoint. Then look to the left and see if there's a higher low that led to a new high that has not been taken out, or if it's the other way around, if you have a lower high that led to a new low that has not been tested or taken out. And then, of course, we put our EMAs on. But this is just for illustration, the levels you need to have. At the very least, you need to have these three. High of the year, low of the year, and the midpoint of the year. They've got to stay on your charts throughout to the end of the year. So that the market gets there and drama starts to unfold, you are not surprised. There's no one who trades price action the way that I am coaching you guys would have been surprised by that. High of the year, that should not have surprised anyone because, of course, the bears are different in that. We are in a sell zone and we sell. All right, guys, have an absolutely fantastic day. Video number 22. Dr. George, we shall catch up again. Bye bye.